If you are betting against this market, can you bet against these big names? Apple heading for a fifth straight daily gain. The $3 trillion line in the sand very much in view. Let's get to Bloomberg's Kriti Gupta for more. Morning, Kriti.
Well, good morning, John. $3 trillion is certainly the magic number, but to get to that, we're looking at a share price of $182.86. Apple trading around $181 in the pre-market right now. So we are inching closer to that. So for my chart of the day, John, I decided to look at what happened the last time Apple looked at $1 trillion or $2 trillion. You actually saw a 40% decline when you're looking at its drop at $1 trillion in 2018, and then a 20% decline just last fall when it hit that $2 trillion market cap. Of course, we look at this on a logarithmic scale, as Tom Keene would like. The big question here is, does that mean when you hit $3 trillion, you'll see another drop? Because, John, one of the big questions here is that, yes, big tech leads the benchmarks to those record highs. You saw one yesterday. You could be seeing one today as well. It also leads those corrections. So could this potentially signal a big macro correction that may be in the cards?
I really hope Tom is watching and or listening today, because we're quoting the Dow. Matt Miller is talking about history. Kriti has a log chart. Kriti, when we talk about the Apple story, though, and what's going on aside from just the equity price action over the last 24 hours here in New York City, they've started shutting down stores. How indicative is that of a more macro story?
Well, this is crucial to what you're going to hear in the macro space, specifically because this kind of brings back what you saw in the summer of 2020. Remember, this was before we had the vaccinations, while we were still dealing with lockdowns, a big hit to summer demand, not only in disposable income, but that classic driving season was kind of under wraps. And one of the big indicators for the market where you actively saw the S&P 500 on an index level trade off these headlines was when Apple decided to kind of close their stores and really kick off those, or I should say shut down those kind of services that they had. The Genius Bar, for example, was shut down specifically in New York, but also across the country. And this is how you saw a lot of that recovery trade first emerge when Apple started reopening their stores, not only in New York, but in LA, in Chicago, in Dallas. And that ended up kind of becoming a proxy for this broader reopening. And the reason for that is because Apple is actually kind of a proxy for that luxury demand, for that consumer income, that disposable income that they're willing to spend on luxury products. I know everyone has an iPhone these days, but iPhones at the end of the day are a luxury product. Add that on to the foot traffic you need to get in for their services that Apple provides for, of course, attuning to all of their products. And you kind of have this little macro proxy built into the stock.
It's true. I need to get to the Genius Bar. Ever since the software refresh on my Apple Watch, it runs out of battery in like 10 hours and sleep mode isn't working. Do you know how to... Do you have any idea?
We'll have to get that fixed. I'll make a call to Tim Cook. We'll see if he can get right on that.
John was making an interesting point yesterday, or talking about the importance of reducing the time that people need to quarantine after testing positive for COVID. It was 10 days. Now the CDC overnight has reduced that down to 5 days. This is bullish for markets, isn't it? Because airlines that were having to cancel flights, or Apple, maybe this is one of the reasons they had to close their stores in New York, aren't going to need that if they can get a deeper bench, more people, and not only for the corporate world, but also for healthcare, right? If you have more first responders able to go to work, that's a good thing.
It is, in theory. The idea and the key word there is if you're asymptomatic, to get that kind of lowered quarantine time, especially because I think CDC officials and health officials, health experts point to those first days of infection as when you start to see you potentially be more and most contagious. Now, this isn't just about Apple now when it comes to the labor market, but it also comes to things like airlines. We were talking about this yesterday. A lot of those flight crew shortages, pilots, this new kind of step from the CDC could actually make it one step closer to treating the coronavirus like a flu, essentially, in the long term, where if you have a flu, you don't have to quarantine for 5 or 10 days. You just have to deal with it. And then once you feel sick and you're not contagious anymore, you can come back to work. So this would, on that front, be a positive for a lot of corporate America that is dealing with those labor shortages.